Morning, I'm Chris Beach, and welcome to Charting the Markets on IG Live. And it's a muted start across the board, really, for markets, particularly equity markets, as they're awaiting, obviously, the big central bank decisions of the week. Fed and the Bank of England, Bank of Japan, also US CPI due, UK CPI rather, due this week on Wednesday. So that's another one to keep an eye on, and certainly will influence UK assets, that UK inflation reading. So far, it's a relatively quiet week. Overall, we did have a down 1% drop in the Nikkei, as we'll come to in a second. Really, that was playing catch up from Monday because Japanese markets were closed on Monday for a holiday. So as a result, they missed the weakness in markets that was occasioned by that warning from Friday from Taiwan Semiconductor Manufacturing Company, which warned of weaker demand there. But it was the 11th successive positive Monday close for the S&P 500. Even the Dow managed to eke out a 6-point gain for the session. So signs of stabilization after a slightly rocky end to the week for markets on Friday. Relatively quiet in FX. Canadian CPI, the only event really of note today. But obviously the dollar very much in focus as we wait to see what the Fed will do tomorrow. And then commodity markets as well, not too much movement in gold, but oil prices continue to make headway. And this is the big driver, I think, for the moment. And it'd be interesting to see whether it starts to feed through to more inflation readings, because I think with last week's US inflation showing signs of increases, mainly driven by the price of oil, that is beginning to will have to factor into the Fed's calculations. Maybe not this week, I think, because they won't want to react to 1 month's CPI data. But by November, if we have more indications that that rise, that surge in the price of oil to its highest level in 10 months is really beginning to see CPI return to strong growth, then that will maybe have to influence them in the direction of hiking rates, maybe even into 2024. And of course, at the beginning of this year, we thought we'd be in a cutting phase for the Fed, and that's been pushed out now, certainly into the first few months in 2024, and most likely beyond, really. In fact, it's almost hard to imagine, unless inflation drops meaningfully over the next few months, that we'd see any Fed rate cuts next year. So beginning with the indices and starting with the Dow, which we're going to slightly different order of markets this morning. We're going to start with the Dow, currently trading 34,680. And that shows a bit of stabilization here in US futures after Friday's sharp drop. It was quite a volatile week last week, certainly the last 2 days. Thursday saw it surge back towards 35,000. Friday saw it almost entirely reverse that move. But as you can see, a form of trendline support at least continues to hold up this market and prevent any sustained downturn with the market so far, with futures here really stabilizing above that trend line. It is only, of course, a line on a chart. We should not forget that, but it is still broadly in an uptrend. You can see there from March and April and May, we're still seeing steadily rising prices. Just a bit of hesitation in the short term around that 35,000 level. That's the thing that's holding us back. If we can clear that daily close above 35,000, that would send a message that the buyers who have reasserted control, the price will be back above the 50-day moving average, and then it could clear the way from back towards 35,600 and beyond. Really. So trendline support still holding here. Close back below that, below 34,500 would certainly be a negative development and could open the way towards these lows from beginning of September, 34,320, and then down towards the August low, 34,050. Over to Japan. One of the big winners, of course, this year. It is quite a popular market with IG, not quite as popular as, say, the Dow or the NASDAQ, but nonetheless, the Nikkei surge this year has really caught people's attention. And that came, if we look back into context, if you look at 2022, whereas the NASDAQ and the Dow and the S&P suffered in 2022, the Nikkei, aside from its opening slump, didn't really go anywhere. You had a frustrating year of range-bound trading, down to 25,700, up to around about 28,500, and then back down again. Which, of course, is great if you're happy range trading. If you're looking for that sustained multi-month move, not so great. But you did finally get that breakout into the beginning of the year, back to 28,000, just moving above previous highs, and then consolidation in March, and then off it went. And since then, of course, it's been a slightly different story because nothing keeps moving a straight line forever. But you've had the Nikkei reach that June peak, drift down, do its best on several attempts to recover on a more sustained basis. But you finally found an August low around 31,300, and now we find ourselves 2,000 points higher from there. And so far, showing signs of stabilization. Again, Thursday, big update for indices. The Nikkei did well, didn't get knocked back too badly on Friday. Obviously, Monday was a holiday, and you're now seeing the index beginning to push higher again. So consolidating more or less above these early September highs at 33,140 or so, with the first line in the sand for this being those late July highs around 33,400 or so. And a close above that would obviously really ignite a move towards, or could well ignite a move, because nothing is certain in markets, could ignite a move back towards those June highs and beyond. And certainly would give this uptrend really a kick into action once again, after what has been quite a frustrating little pullback, to say the least, from those June highs. Not too dramatic in terms of losses. It did lose about 8%, but that was stretched over the course of 2 months. So a slow burn before the steady recovery. And as with the Dow, really, we'd need to see a break back below that trend line support, really, to even suggest that this move higher from the August lows has run its course, and maybe we're seeing a short-term bearish view. But as you can see, with the price still firmly up and that trend very firmly in place, it's very hard to argue with the medium to long-term bullish view on this index. And then over to France, another one of those indices we don't always look at, but we've tried to boost coverage on it a bit more because it does have some interesting movement to it. Again, like the Nikkei, had a good strong run to the beginning of the year. Since April, it's not been so great, of course. Has seen a bit of a drop down, 7,100, big support level there, really. Zone of support. It dips into this level repeatedly, and the buyers come back in again. They can't drive it much higher than 7,400, but they have so far avoided any daily close below that level. Also, since really the middle of August, we've also avoided a close below the 200-day moving average, which continues to rise. So the index finds itself slightly stuck at the moment, stuck between 7,400 on the upside, which has been the level that gains have faltered since the beginning of August, and then also supported, though, by the 200-day moving average and by dips into that 7,100 level. Maintaining more or less the uptrend, just going through an even more drawn-out consolidation process than the Nikkei, which is not surprising, really, when you consider that the index went from an October low to April high, gaining 34% in the process. So that has to be paid for at some point, and this consolidation appears to be the necessary digestion of those gains. Looking to FX markets, not too much movement, although losses have continued overall for euro dollar and for the pound against the dollar as well. US dollar in resurgence, really. You've seen euro dollar go from a multi-year high, the highest level since the beginning of 2022, up at 112.75, back down to its lowest level since the beginning of June at 106.80. Really, as the dollar comes back into focus. And I think we are seeing the emergence of what could be a more bearish view in the medium term as well. You've seen short-term rallies knocked back from trendline resistance. So even if you're going to move back towards 107.80, that might run into sellers. You've got the 50-day moving average rolling over, not yet below the 100-day, but certainly this uptrend seems to have run its course for the time being. And then we could see maybe back down towards these December, January and February lows around 105.30 in the shorter term, if the sellers reassert themselves. But different view to get a bullish view back in place here. Well, we need to see it back above the 200-day moving average at the least, and then you've got to move back beyond that late August high at 109.20. And then it's basically the same with the pound against the dollar. Back still yet to test those May lows, but really the uptrend coming under pressure in a way that it hasn't done for a while. Now, if you look back to February, it seemed as if the same thing might happen. You had a big drop from recent highs. It was back below the 50-day and 200-day moving averages and was beginning to look a bit tough, and then rallied and continued to rally. So it's always possible that these things can change. For that to happen in this case, really, I suppose you'd want to see the price back above 125.50, 126 to say, okay, a low was formed, and you could then start to argue for a more bullish view again, and maybe suggest that the US dollar weakening, the pound could see fresh upside that could revive the bullish move. Otherwise, it does look slightly beaten down at these levels, and you might argue for a short-term rally. Again, the problem is, of course, that you could see it move back towards 125 and it still really be in a downtrend, certainly from the late July highs. So if that continues to hold, that would certainly maintain the bearish view at this point, and might cause people to see over the course of time. Maybe if you get a rally, more sellers emerge, push it back down to the Malos, and then onwards from there. Really tough one to call at the moment. Certainly the uptrend has been paused at best, brought to an end at worst, and we'll see what happens from here, particularly, of course, with the Fed and the BOE this week. So if you are trading the pound against the dollar, do be aware of that. The Aussie dollar as well, doing its best to try and claw back some lost ground, but it's a very miserable performance. We've managed to get back above 64.53, but still the big problem here is going to be this area around 64.90, 65 itself, because that's where the rally at the end of August failed. It was previously support, could now become resistance, and indeed as it did become resistance at the end of August. So if it stays below that, drops back down, you could see the sellers pounce on this once again, drive us back to down towards 63.60. And again, very much downtrend. You've got falling 200-day moving average, falling 50-day moving average. The price is below both of them. So I think the inclination here is more to sell rallies than buy the dips. And we're just looking to see how far this bounce has to go. Again, it's all dependent on what the Fed says and does tomorrow. More hawkish Fed clearly gives the US dollar, could knock back the Aussie. So one to watch there. Finally, commodity markets, and gold finds itself at an interesting juncture. 3 days of gains have carried it, and fourth day really today, have carried it back towards trendline resistance from the July high. So that's where the bounce at the beginning of September faltered and turned lower. So this is the key thing, because you did get a higher low last week compared to where it was at the middle of August. So that's a small tick in the box for a bullish thesis, but this trendline resistance is definitely a thing to watch in the medium term. A turn back below the 200-day, back below 1920, and we probably argue that the sellers have seized control, and then it's a question of targeting 1905 and then down towards 85 in those August lows and onwards from there. Really, buyers I think would need to see the move back above 1940, 1950 to say, okay, this has run its course, and maybe we could see a chance for it to move back in the direction of 1980, and they might see some buying or weakness around those levels. But it's a dollar story mostly at the moment, partially also yields driving this one. Gold nonetheless more attractive than it was, I think, with stabilization more than anything else. This uptrend is again paused, but hasn't quite thrown in the towel yet. Every time you think gold is poised to break definitively lower, it then recovers. So this one's been quite a tough one for the sellers really over the past couple of months. And then oil prices. This is where all the attention really is. The market's woken up to this and the risk that oil prices will drive the resurgence in inflation. We've seen oil go from that June low up to where we are now. Again, 36% gain for oil prices in the space of about just over 2 months now, really. Firmly targeting those highs from October and November up at 92, 95 for WTI, and similar performance for Brent as well. Buyers came in firmly during August in that weakness, and it's skyrocketed from here. So at some point, you'd expect maybe someone in OPEC to call for an increase in supply to take advantage of these higher prices, but it is quite a political game at the moment. But it's the higher oil price that drives the risk of higher inflation, which means higher interest rates, which does again pivot towards the possibility that we do get a recession next year. And that's the thing, I suppose, markets are worried about. That's why people are animated by the drive in higher oil prices. Of course, it also hits consumer spending. So you can see where it really begins to inform a slightly more negative outlook on the global economy than was the case when oil was back down comfortably at $66, $67 a barrel. So as you look to the rest of the session, we're expecting a slightly positive open across the board for US markets. The Dow expecting to start the day at 34,673. That's up about 50 points from where we finished yesterday's close. Canadian CPI, the only real event, I think, on the calendar today as we warm up for tomorrow's bonanza, really, of the UK CPI in the morning, and then the Fed decision in the evening. And certainly something to keep an eye on definitely there, because I think what the Fed says and does tomorrow will be key for the second half of September and indeed beyond. But that's it for me. Thank you for joining us. We will see you again tomorrow at 10:30.